built on trust, fueled by kindness, powered by Provisor. Welcome to the Ben Revak Mortgage Podcast.
So, Meg, what are you seeing in the market right now? Like the buyers you're working with, we're going into the fall. It's kind of slowing down a little bit. What are you feeling from buyers as far as their outlook on what's going on in the market?
I feel as though that buyers are a little bit more relaxed now. So they're used to the rates. They're used to the cost of getting a mortgage. I will say, though, there's still sticker shock. There really still is sticker shock. I mean, I have to work with a buyer for at least a couple showings before they get acclimated to, okay, this is what I can afford. They always have these expectations in their mind of what they think they can buy, and then they have to readjust after seeing a few places and realizing that prices are still high.
So it's like they might see the numbers ahead of time, but when they actually go out and get in the house, they realize like, oh, this is what I'm getting for that dollar.
Right.
And then that's where the sticker shock comes in.
Right. And, oftentimes buyers sort of have this price range, right? So they go get pre-approved and they know what they're pre-approved up to, but more often than not, they don't want to spend that much, right? So we start looking at homes in a lower price range and they go, oh, I'm not getting as much as I wanted or thought I would get. Then they start looking at homes closer to the top of their range. They sort of kind of step back and they go, okay, I got to suck it up. If I want this, I've got to suck it up and go a little bit higher in my price range.
Yeah, no, that makes sense. I see that too. I see a trend in the lending side of it where the way I do a pre-approval is I give them their maximum monthly payment. So they know exactly what their max is. They can do anything up to that. And then with the breakdown, they can see like, hey, what is the payment for that particular house? And ideally, they know before they go on the showing. So they know it works and they're comfortable with it. More often than not, I get questions like, hey, what can we do to make this one work? Because I put it into the breakdown, it's slightly over. Like, all right, well, can we do a buy down? Like, if you don't have the funds to do a buy down, can you do a buy down and ask for a seller credit to cover the cost of the buy down? Like, that's similar to what I'm seeing is that buyers are not settling for a house they don't want. They're more willing to push the envelope on their payment.
And that's the number they have in mind. They don't have the price range like, oh, I'm looking for a $350,000 to $400,000 home. They're thinking, I need to stay at this price in order to make all my bills work. And two, oftentimes if buyers are coming from a renting situation, they have a comfort level with that rent payment, right? They have to sort of come to a spiritual moment and go, okay, I'm going to go higher than rent, but I'm comfortable with that because I'm going to be owning it. Then they start looking and go, okay, I need to be comfortable with a little bit higher. And then we get it. Let's say I've got a buyer from you who with pre-approval and we can run the numbers in your spreadsheet at each house we look at. We do that and then we go, okay, we're close, but how can we make the numbers work a little bit better for me? And there are solutions to every problem. There are.
Absolutely.
But it's definitely some compromise that the buyers are making.
From what I see, it's easier to find solutions in the fall when you have a house sitting for 2 weeks and the seller's at least willing to entertain a conversation around price or credits rather than in March where good luck.
Right. If you are looking for something that you want to pay around list price or maybe potentially a little bit under list price, this is the season to do it. Fall is definitely the season to do it. And on top of that, buyers have been really happy to see price reductions. I mean, I live in New Berlin. We're seeing price reductions all the time because they're pricing the homes like they're selling like hotcakes in April, but it's October, November now. So if you price it like it's April, inevitably you're going to have buyers walk in and go, can't do that. It's too much. And so we see price reductions. I'm also seeing offers at list price, even a little bit under list price. And it's really making buyers happy.
It's nice to have a little relief. I'd say we've been in a seller's market for the last 5.5 years. It's a breath of fresh air to let that pendulum swing back, not even to the buyer's market, but just a little more in the middle.
Balanced.
A little balanced.
I would say it's pretty balanced right now.
It feels like it.
The buyers that are feeling the most pressure are the ones that are in the entry-level market for each community. And it's different for each community. So like, let's take West Allis, for example, and then say Brookfield. The entry-level market for those two are different, right? So the entry-level market to buy a home in West Allis, I would say is probably in the $250,000 range. The entry-level homes in Brookfield, you're talking $400,000, right? Those markets, though, are still the most chaotic. You just have the most demand in those.
Everybody wants to live there.
And then if you're a little bit above those entry-level markets, it is more balanced.
The houses that are 6 to 7 to 800,000, I've seen that too. They're usually not flying off the shelves on the first weekend.
Right.
I mean, even in Tosa, I was at an open house yesterday, a broker's open, a very nice 5-bedroom home in Ponderosa. And it listed at $499. It's been sitting for 2 weeks. 5 bedrooms. It needs a little work, little updates. But it's a nice house in Tosa. I mean, if that thing was remodeled, I mean, you could put $100,000 into it, you'd have a $7 $250,000 house easily.
Yep.
And it's sitting. But it's also, we're into October. There's just not a lot of competition.
It probably wouldn't be sitting if it was April.
I don't think it would.
Yeah.
I think if it was listed in April, it probably has sold for well over list.
Exactly.
There's just that frenzy.
Yeah. There's opportunity, I think, in what we call the off season, right?
For buyers.
For buyers. Yeah.
100%.
There's opportunity. Yes.
Yep.
There's opportunity to negotiate. You have a little bit more leverage than you do, say, in the spring. And like I said, the prices are starting to tick down a little bit.
I see that too with like FHA buyers, VA buyers. Unfortunately, a lot of listing agents will see FHA or VA buyers as like subpar to a conventional borrower. And there's obviously reasons for that. But as the year goes on, I see a significantly higher percentage of accepted offers for those types of financing because it's easier to compete when you don't have as many offers going. If you're the only offer and you're using VA financing, absolutely they'll consider you. If you're one of 6 and you're VA and the other 5 are conventional in similar terms and price, good luck.
You're exactly right. I hesitate to use the word subpar though. So if I'm listing a home, right, and my sellers have 4 offers to choose from, they don't necessarily see an FHA buyer or a VA buyer as less than, they just see it carries a little more risk.
For sure.
So when I am sitting down with a client who has multiple offers on their home, I put it all in a spreadsheet and each column is a term of the offer to purchase. So you have conventional, FHA, cash, inspection, yes or no, appraisal, yes or no, and all of that. I put it into the spreadsheet.
So it's very methodical to evaluate these.
It is. And my advice to my clients always is you want the most money with the least amount of risk. And who wouldn't want the most money for the least amount of risk?
That's such a good way to go at it.
So not every offer that a seller accepts is the most money because there might have been a better offer in terms of risk. And unfortunately for VA and FHA buyers, inherently, they just carry a little bit more risk. It's not a bad thing. I wish
you literally have to sign a form that says, we will not keep your earnest money if it doesn't appraise. You can argue whether that provision supersedes something that you write in the additional comments, but there's absolutely a risk there. And that's when I said subpar, that's what I was referring to is simply the risk level. Like, why wouldn't you take a more sure thing when you have it on the table?
Exactly.
If all your terms are the same. So how could a VA or an FHA buyer make their offer be less risky besides just offering more money?
Okay, there's lots of ways. And it kills me when I speak with other agents and they really just kind of put them in boxes. FHA, VA, conventional, cash, because they don't fit in boxes, because you can tweak the terms of an offer from an FHA buyer to really make it appealing. So you could increase your earnest deposit amount. You could pay your earnest deposit faster. You could do an inspection, but have it as a limited inspection, right? There's lots of things you can do with an inspection contingency.
Yeah.
So if an FHA buyer is looking at a home and they're like, I really love the home, but I want to have an inspection. Okay, great. What are you most concerned about? Big ticket items or everything? Usually it's big ticket items. So I say, okay, great. Let's ensure to the seller in our offer, in writing, that we are not going to nickel and dime them on a GFCI outlet. We are not going to nickel and dime them on flooring or this or that. You are purchasing a used product. You understand that there are things that you're going to have to do to make that product the way that you want it, but you don't want to risk needing a $30,000 roof and walking into it blindly. So I oftentimes will compensate for some deficiencies in their mortgage package with prettier terms, with like the inspection or the appraisal. Aggressive timelines is another way to go about it. Like, I work with you all the time and I push you.
No, I love it. I'm like, there's no other offers. It's been sitting for 2 months. And Meg's like, can we close in 2 weeks? Don't say yes, because I'll write it. No, but I love it. Yeah. You have an aggressive mindset.
I do.
One of the things that I see that sets agents that are very successful apart from agents who aren't as successful is their willingness to ask the tough questions, be aggressive, and really get into the weeds in the terms that they put in the offer. When I hear a newer agent say, we're writing with a home inspection.
Okay.
Yeah, exactly. So what about the home inspection? Like, I see the offers. I have a unique perspective as a lender. I only see the offers that win. Right. I see what wins. So all day long, I'm looking at accepted offers. This one won. This one won. And you just start to see trends. Like, what's the pattern that wins? In a slow market or a house that no one else wants, you can write home inspection.
Yes.
And you'll get it. But when you're one of 2 offers, I really think it's a mistake not to do what you described, where you need to talk with your buyer and understand what's important to them. What are the real risks? Help them understand the house, and then craft the offer in a way that makes it a win-win. It's a win for the seller.
Yes.
They know that you're not going to try to nickel and dime them. It's a win for the buyers because they're protected from all the big ticket stuff. Like, they're not going to have a foundation repair for $40,000 a year after closing.
Right. And there's always sort of that balance that you want to find in there. It's interesting that you say that you notice the trends in the offers that win. So one thing I have done, not with every buyer, because some buyers just kind of get it right from the get-go, but if buyers are struggling with writing offer after offer after offer, buyer and getting beat out, I will show them that spreadsheet on a house that I listed. I say, listen, this is what that agent is showing their sellers. And I said, this is the offer that won. Do you see what's winning here?
So it's like education is what it comes back to.
Yeah.
When I step back and I look at how my business has evolved to the way that I operate today, it's based completely around the client experience, the realtor experience, and the foundation of that is education. If the client doesn't know what their options are, they can't feel good about their decision.
Right.
Because they weren't able to make a decision. And so when I'm coaching other loan officers on how to be successful, we start with, you got to ask a lot of questions to understand what's important to that person. And then once you understand that, then you can lay out their options. And it's not so much that they're going to end up with a different product than if you just tell them what to do, but their experience in getting there is going to be dramatically different. And so if you don't show them the spreadsheet and you just say, this is the one we need to go, how are they going to feel about it? Right? They're not going to see the big picture. So you have to bring them along for the ride. That's where I see like the really successful professionals, whether it's insurance, real estate, mortgage lending, they take the time to have those conversations. And the folks that aren't as successful, they're not willing to invest the time to educate the client. They're more like, I'm the professional, this is what you need to do. And I always make a professional recommendation, but it's after I've provided that education and made sure they understand those options. Ask them, what other questions do you have? I'll ask that over and over and over until they say we don't have any. And then I'll say, well, this is based on what I'm seeing. This is probably the way I would go. Ultimately, it's up to you. You don't need to decide today. About a week after we have an accepted offer and your rate's locked, that's when I need to know.
Yeah. And this is going to sound like I'm just gassing you up here and fluffing your feathers.
It's okay. You can do that.
Because I work with other lenders.
Yep.
You know, some clients come to me and they already have a pre-approval from other lender. There are stark differences between lenders. And, you know, too often a lender, a mortgage loan officer will simply take the application, give them their pre-approval and wait for the accepted offer to come in. Yeah. And the buyer has no idea. They have other options. They have no idea why the product or the loan is structured that way. They have no clue. When I get a buyer from you, they're very educated on why they got qualified for what they got qualified, what other options might be available to them. For instance, if a buyer's pre-approved for an FHA, well, then can we look at conventional? Like, what would that look like? And you've given me buyers that are pre-approved for both. And in different situations, I have to use different.
The other.
Yeah.
Yep.
Yeah.
And you know, it's funny, whenever I bring on a new person on the team or I'm helping another loan officer, I show them the process, how we build the breakdown that's customized to the buyer. And then, you know, the terms that we put in the pre-approval email to make sure that you know all the important stuff, like, hey, they need a seller credit. Here's why. But there's a lot of buyers who will say like, hey, I'm a first-time buyer. I'm looking at single family or duplex. Yeah. And I'd like to see numbers for conventional and FHA. Well, that's 4 pre-approvals that we do.
Right.
That's really 4 times the work. When you step back and look at it, like we're doing that pre-approval 4 different times. There's nothing wrong with it. I think it's the right thing to do because if we don't take the time to figure it out, they're not going to be able to make an educated decision. Mm-hmm. And so you come back to what's the core of what we do, educating people. If we don't take the time to figure out what their options are, we can't educate them on their options. Yep. And so even though it is a lot more work up front when someone has those kind of questions, we're always willing to do it because it gives them and you the tools to make sure that they're getting the right house with the right terms and they're not going to be surprised at the monthly payment or the cash deals. Yeah. And then they can also be competitive because like if you're pre-approved for both, a lot of times if your credit is below about 680, if you're not doing 20% down, that's kind of the cutoff with credit scores where FHA tends to be a better deal than conventional. Every situation's unique, but in general, that's about the cutoff just because of how loans are priced and how mortgage insurance works. So if someone qualifies for both, their payment on a conventional loan might be $300 a month higher than FHA. But if they're like gung-ho, they want to buy this house and there's one of 4 offers and the listing agent says, yeah, we're not even going to consider it FHA. Well, now you have a choice to make. Mm-hmm. At least it's an educated choice. You know, is refinance to FHA down the road if maybe the conventional loan is just to get you in the house.
I think too often buyers think that it's very linear. So they think, okay, I get this pre-approval, then I find this house, then I do that. But it's not, you know, like you can get the pre-approval, like you were saying, for both FHA and for conventional. And then they go out home shopping with me and I can educate them. And this one's probably not going to fly as an FHA purchase. So if you really want it, we have to struck. Yep. And then 2, home shopping and home buying happens in the evenings and on weekends, right? So you have to have a mortgage lender who is available to help you work through anything. And B, if I already have both of those options, dang, I'm ready to go. So if we are looking at a home at 4:00 on a Saturday and I determine, hey, this one's probably not going to fly as an FHA purchase. There's 2 other offers on it. There might be some FHA issues with the home that will get flagged. Can you afford this with a conventional purchase? Let's run the numbers and go with it that way. So helpful.
Yeah.
So are you finding more FHA wins lately?
Yeah. Oh, yeah. Every time. So really, once school starts is when I see FHA and VA accepted offers really pick up. A lot of realtors that I work with, like they'll go back to their pre-approved list, people who've shopped with them that haven't gotten an accepted offer, that got discouraged in the spring. And they'll say, hey guys, now's the time. We have until Christmas. And I do the same thing with my pre-approvals. Everyone who's sitting out there, I just send them a little touch point like, hey, just checking in how it's going. Now's the time. The market has slowed down. It's going to be probably crazy again after New Year's, but you have until December. So get your toe back in the water, get your MLS search updated. If you haven't talked to your realtor in a while, reach out to them and let's just see what's out there. Doesn't mean you find the right one, but you're definitely not going to find the right one if you're not looking. That trend has held true since I started independently in 2019. It's pretty consistent. The second half of the year, I do more volume and a higher percentage of government loans, FHA and VA, than in the spring.
Yep. Same with me. So everybody wants their mortgage lender to have a crystal ball. Hear this question.
And if we did, we wouldn't be mortgage lenders. We'd own islands.
Do you anticipate a chaotic spring?
I anticipate a chaotic spring. Yeah, I do. Fundamentally, supply and demand. Like you look at all the statistics, like is inventory rising? Yes. Is it where it needs to be a truly balanced market?
Still no.
No, it's not. I think this fall feels a little more balanced because inventory has been rising and the natural dynamic of people wanting to buy in the spring exists in our market just because of all of the seasonal factors.
Sellers come out of the woodwork.
Yes,
they do.
They do. You know? Everyone waits to list till spring. That's just the nature of the market. And we're not going to change that. So we could debate why it is all day long, but it exists and it's pretty obvious to anybody that it exists. So I think we're feeling a little slower in the fall now because we have rising inventory. I don't think our inventory is near where it needs to be to call it this market when we hit spring. I think spring's going to be just as chaotic. Maybe we're not like, you remember 2020 when you'd have 60 offers?
Yes.
I mean, my coworker at the time, she sold her house. She was right off of Greenfield in, I think it was West Allis. She legitimately had over 40 offers. 40 offers on a little 3-bedroom house.
This is when, in 2020?
This is 2020.
Yeah.
This is just chaos. Rates were in the 3s. Like it was just the
money was free.
Money was free. Yeah.
House.
And because rates were so low, everyone qualified.
But you have to admit though, because I look at national trends, we have it better off here in the Midwest than the East Coast and the West Coast.
They're seeing huge decline. Like home values in Florida, California, Arizona are dropping.
Plummeting. And homes are sitting on the market for months.
Yes. We haven't seen that. We're a pocket. But like you said before, West Allis and Brookfield, you look on a map, it's a 10-minute bike ride, Brookfield to West Allis. But when you look at the dynamics of those micro pockets of geographic areas, those markets are entirely different. The trends you see, the price points, even the type and style of home and who can afford it. And I think that exists on a national level. It exists right within our Milwaukee area too. I had a client email me yesterday and say, well, why do we need a realtor? And I'm like, how long do you got? Because like you definitely need representation. You need representation. And the representation, I think it's important, but anyone who's licensed can represent you. They will try. And what you really need though is you need someone who knows the market. Because they'll help you accomplish your goals. They'll use their professional experience and knowledge of the market you're trying to buy in to help you get done what you want to get done. And do it in a way that's as low risk as possible. They're going to understand what's important to you throughout the process.
And they're going to fight for you.
They're going to advocate for you. They're a fiduciary on your behalf. The same client asked me, well, we talked to another lender. They seem pretty good. Like, do you think we should talk to you too? Because it was a lot of work to upload all the paperwork to their website. Isn't it all kind of the same? Aren't all lenders just kind of the same?
A lot of education.
Yeah.
A lender probably wouldn't like me saying this, but I do tell my clients, this is the largest purchase that you're going to make so far in your life. And if you were going to purchase a washer and dryer set, are you just going to one store, talking to one salesperson and giving them your money? No, you are going to shop around for a washer and dryer. Why would you not shop around for the best loan package and the best loan officer to get you through this?
I take pride in being very competitive with rates. We're never going to be the rock bottom rate. We want to be the best service. So we're very, very competitive on rate. There's not a lot of lenders out there who are going to undercut us on what we offer our clients. The service though is where we really try to hang our hat. Like, you're never going to get a great service and great experience if you go to a cut rate place. And that's just the nature of the market. Like, you'll always find someone to do it for $100 less, but in closing costs. But it's like, what's really important to you?
It's like buying a car from Billy Bob's lot.
The corner lot,
street,
and you're find out at closing it's a salvage title. And as you're signing the form, like, just sign this last one says it's a rebuild. It was flooded. It was in Hurricane Katrina and it sat for 6 years or whatever.
When you're buying a large purchase like, oh, going for rock bottom. Please understand what you're getting yourself into.
I mean, even like real estate commissions, there's this whole lawsuit and everything. It's like, why do you think the market continues to bear roughly 6% commission? It's because there's a real value there. And that's what the market figures it out to be. Like, there's a lot of risk. Like, what does it cost you to stage a house now? You stage a house for thousands, right? And who pays for that?
I do.
And what happens if that house doesn't sell?
I eat the cost.
That's a write-off.
Yeah.
But
it's the same for both you and I. If this does not get to the closing table, we don't get paid. So
yeah. And I think that's another important thing. And I try to educate buyers when they ask questions like, why do I need a good lender or a good realtor? We are 100% commission. What you're doing is you're getting people to stand in your corner for you and fight for you to get your goals accomplished. We only get paid if you close.
Right.
And so we're going to do everything in our power to make sure that you're getting accomplished what you want done in a good, safe way. That's a win-win and as low of a risk as possible. Like, there's no better motivator than having people's financial interests aligned with yours.
Right.
And in addition to that, you and I both by law are fiduciaries, which for anyone who doesn't know, a fiduciary means that we are legally obligated to act in the best interest of the people we are representing. Right. So not just ethically, for me, it's like we go above and beyond to be transparent with how things work, but state law says we have to. And if we don't, we have a liability. We can be sued.
Right.